Breaking news, the crypto market has crashed, losing $110 billion overnight. Bitcoin and Ethereum have fallen and fear is spreading fast. But why did this happen? Is this a slight dip or are we heading for a more prolonged downturn? In this video, I will explain the main reasons behind this crash, how it affects investors and what would happen next. Should you sell, hold or buy more? Stay with us as we uncover the truth behind this drop and how it impacts your investments. Hello everyone, I'm Jay, your host and guide to the exhilarating world of crypto. Stick around because today's adventure is packed with stories that will make your jaw drop. It helps us out tremendously with the reach of this video. The market crash has caused significant losses, shaking the entire crypto industry. Bitcoin, Ethereum, and many other cryptocurrencies have dropped in value. This decline was not caused by one thing, but by several factors that led to fear and selling. Uncertainty is a primary reason for market crashes. When investors feel unsure, they sell their assets to avoid losing more money. Recent worries about inflation, higher interest rates, and economic problems have made investors nervous. Many have moved their cash out of crypto and into safer investments. Government regulations also played a significant role. When governments introduce strict rules, investors often react with caution. Recently, regulators in the US and other countries have announced new regulations on crypto exchanges and taxes. These changes have made investors more careful, leading to more selling. Security issues have also added to the decline. A recent $1.5 billion hack on Bybit raised concerns about the safety of centralized crypto platforms. When significant hacks happen, confidence in the market drops and investors withdraw their money, fearing further losses. This sudden movement can lower prices, triggering panic selling and increased volatility. Additionally, repeated security breaches highlight vulnerabilities in exchange systems, leading to increased scrutiny from regulators and hesitation among institutional investors. As trust declines, many traders shift their funds to decentralized alternatives, cold storage, or stable assets, further impacting liquidity and overall the market stability. The fear of future breaches forces exchanges to enhance security measures, but uncertainty lingers, making recovery slower. Crypto markets rely on leveraged trading, where investors borrow money to increase their holdings. When prices fall fast, these positions are automatically closed, forcing trades to sell at a loss. Over $1.3 billion in leveraged positions have been wiped out, making the crash even worse. The crypto market is in turmoil. Major coins have lost significant value and billions of dollars in trades have been liquidated. This sell-off has caused concern, with some fearing it could lead to a more sustainable crash. Bitcoin has fallen by 9% in one day, translating to a loss of approximately $80 billion. That's from its total market value. Ethereum has dropped by 8.5%, wiping out nearly $40 billion in value. This decline has severely impacted the entire altcoin market. Binance Coin, Solana, and Cardano have also experienced sharp losses, shedding over $30 billion in market capitalization. The overall crypto market value has plunged from $2.3 trillion to $2.19 trillion, marking one of the most significant single-day losses of the year. Many investors are now questioning the market's ability to recover in the short term. Many traders who borrowed money to bet on rising prices have been forced to sell at a loss. As selling continued, pressures increased and prices fell further. This has led to major financial losses for over-exported traders. Crypto forums and social media platforms are full of discussions about whether the market will recover or continue falling. Some analysts predict a rebound while others warn of further declines. As fear spreads, some investors are selling their assets, pushing prices even lower and increasing overall market instability. Crypto exchanges have seen a spike in trading as investors rush to sell, trying to cut losses or secure liquidity. Due to the high transaction volume, some platforms have struggled to process withdrawals, leading to delays and frustrating among users. The extreme price swings have made trading riskier than usual, with increased slippage, wider spreads, and unexpected liquidation events affecting retail and institutional investors. Not all investors are selling in panic. Many in the crypto world see this as a buying opportunity rather than a crisis. Some well-known figures in finance encourage patience. Robert Kiyosaki, author of Rich Dad Poor Dad, has long supported Bitcoin as protection against economic problems. He recently said he plans to buy more if Bitcoin prices keep falling. Crypto experts share a similar view. Charles Hoskinson, founder of Cardano, criticized investors who sell at the first sight of trouble. He believes the market has strong fundamentals and will bounce back despite short-term losses. Analysts say global financial trends, new regulations, and security concerns caused this downturn. While these issues bring short-term uncertainty, many experts still believe in crypto's long-term growth. In the crypto community, many experienced investors are holding their positions. They see market dips as a regular cycle, where prices fall between recovering and reaching new heights. The crypto market is at a turning point. Some believe this is just a short-term drop, while others worry that more losses could follow. The next few weeks will be crucial in determining the market's direction. The market could stabilize if buyers, especially big investors and institutions, step in. Many times in the past, big crashes have been followed by strong rebounds. If confidence returns, prices could climb again. If fear continues and selling pressure remains high, another wave of declines could happen. Investors are watching closely to see how Bitcoin and Ethereum perform, as they usually set the trend for the whole market. Large investments hold vast amounts of Bitcoins and other cryptocurrencies. Their actions could decide what happens next. If they have or buy more, the market could recover. But if they sell, it could trigger another decline. Retail investors, who often react emotionally to price changes, might wait on the sidelines until the market becomes more stable. Despite the losses, some investors view this as an opportunity to buy at lower prices and strengthen their portfolios. History shows that downturns often lead to new innovations and more resilient projects. Many believe the best investments emerge from challenging market conditions, as lower valuations allow for strategic accumulation. Additionally, past recoveries have demonstrated that substantial assets can bounce back even more potent, rewarding those who stay patient. Investors who adopt a long-term mindset see this phase as crucial for identifying undervalued projects with potential future growth. The crypto market is known for its ups and downs. While this crash has caused fear, it's also created new opportunities. Some investors have exited the market, but others are preparing for the next rally. Crypto has always been about resilience. The projects and investors who stay strong will likely benefit the most when the market turns around. The real question is not just when the market will recover, but who will be ready when it does.